Miners sell Bitcoin, increasing pressure on the market. Miners are selling off their Bitcoin to survive the crisis. Financial statements of public mining companies showed that they had to quadruple sales of cryptocurrency to make ends meet. In May 2022, public mining companies sold 4,411 Bitcoins. This is 4 times more than the average for the month from January to April 2022. This is evidenced by the financial statements that public companies provide to the regulator. Public mining companies are increasing the sale of Bitcoin. Data from analytics firm Coinmetrics also confirms that crypto miners have started moving coins to crypto exchange wallets. Despite the lack of reliable information about the movement of coins owned by miners, it is quite obvious that companies mining digital coins are on the edge of survival. Initially, miners received 50 BTC for each block mined. But every 4 years the amount of remuneration has halved. Now they are paid 6.25 BTC. A new block appears on average every 10 minutes, which means that about 900 bitcoins are created every day. In addition, they receive commission for processing transactions. In good times, miners have enough money. They have enough to pay for electricity to cover other operating expenses, so they prefer to save coins. But now the situation is different. Electricity prices are rising, and the profits of miners are falling along with cryptocurrency rates. Under these conditions, companies are forced to exchange BTC for fiat in order to pay for electricity and pay salaries to employees. As of the end of May, about 46,500 BTC, worth $1.5 billion at the time, were stored in the wallets of public miners. Companies will probably have to increase sales of Bitcoin in order to finance their operating activities. Sales by miners will increase the volume of coins in circulation and increase bearish pressure on the market. At the time of publication, the main cryptocurrency is trading at $20,108. Previously, the cryptocurrency fell to $18,700. This is the lowest value since December 2020. The capitalization of the digital asset market fell to $880 billion, losing more than $500 billion in a week. Got something to say about Bitcoin miners or anything else? Bitcoin derivatives exchange reserve surges up as BTC continues to plunge. On-chain data shows the Bitcoin reserve of derivative exchanges has surged up recently as the price of the crypto has continued to crash down. Bitcoin derivatives exchange reserve observes sharp uptrend. As explained by an analyst in a CryptoQuant post, the crashing BTC price may be forcing whales and long-term holders to open short positions in order to hedge their portfolios. The derivative exchange reserve is an indicator that measures the total amount of Bitcoin currently present on wallets of all derivative exchanges. When the value of this metric goes up, it means coins are entering into derivative exchanges right now. Such a trend may mean investors are opening leveraged positions at the moment, which can result in higher volatility in the value of the crypto. On the other hand, a downtrend in the indicator implies investors are withdrawing their coins from these exchanges currently. Now, here is a chart that shows the trend in the Bitcoin derivative exchange reserve over the past year. The MA7 value of the metric seems to have observed some uptrend recently. Source: CryptoQuant. As you can see in the above graph, the Bitcoin derivative exchange reserve had been heading down for quite a while, until recently when the indicator's value once again started rising up. Recent data suggests that the crash in the coin's price has pushed around 50% of the total BTC supply into loss. Based on this, many long-term holders and whales are also bound to be underwater right now. The quant believes that the uplift in the derivative reserve is because of these long-term holders and whales panicking about their portfolios losing value. These holders are looking to hedge their portfolios and reduce risk by opening short positions on derivative exchanges. The analyst points out, however, that such aggressive shorting would create even more selling pressure, causing the price to see further drawdown. But another possibility also arises from this situation, and that would a huge short squeeze. A lot of demand and a sudden reversal in the price of Bitcoin will need to occur before such an event can take place. The quant thinks it may take more time and further decline in the value of the crypto for the correct conditions to align for it. At the time of writing, Bitcoin's price floats around $19.3 thousand, down 29% in the last 7 days. Over the past month, the crypto has lost 33% in value. Looks like the value of BTC has rebounded back a little after a dip below $18,000. Source: used on TradingView.